So welcome to the Scaleup Valley podcast, where we bring the best of the best to help you scale your business from 1 million to 100 million in annual recurring revenue. So hope you had an amazing summer, and it's great to get back on the show with an amazing guest that has been with us in the past. His name is Rav Dhaliwal, the venture partner at Crane. Ruff, welcome to the show.
Thank you, Mike. It's really great to be back on the show.
Likewise, it's really a pleasure. And for the ones who have not listened to the previous episodes in number 173 to help you out to get back to listen to Ruff. He has been leading CS at Slack, Zendesk, Yammer, has been also at Salesforce, and has been the first London employee of Slack. So a huge experience with customer success, and some of the topics that you like the most to talk about are very related to this, but in a very holistic perspective of business. And nowadays also as an angel investor and in the venture capital world. So, Ruff, did I forget anything that you'd like to add? Not reintroduce yourself into the show.
Yeah, super comprehensive. So yeah, I mean, just for everyone listening, as you mentioned, Mike, I often jokingly describe myself as a recovering software executive. So I spent about 20 plus years in various enterprise software businesses, and the last 12 years, as you mentioned, those companies, they're sort of hyper growth startups that either got acquired or went public. And one of the, I guess, fortunate side effects of being very early in some companies that have grown is that you end up just doing a lot more than your core competency. So my core competency is obviously customers and customer success, but being first boots on the ground, you're doing sales, you're doing a bit of marketing, you're doing PR, you're helping to hire, all different kinds of roles. So, and you mentioned the word holistic, and hopefully, your listeners will come away with the idea that what we're talking about is not some of these things in isolation. We're trying to look at them holistically as the things you need to do in order to scale your business to that 1 million and beyond.
Absolutely. And you've been writing amazing articles. One of the last articles that you've put it together for all the founders and executives out there is called The Missing Piece of Software Sales. So for people that want to get into that article, just go to Rav Dhaliwal on LinkedIn, and you'll be able, I'm sure, to find the article.
Or on Medium as well.
On Medium as well. And I think this is a very common problem, and I will let you introduce a little bit what was the purpose when you had this in mind to start writing this article. But I think that's the traditional or old school sales motion is outdated, and we need to bring a new way of making software sales work. And some of that is related to that before we had a kind of a on-off moment of buying or acquiring software, and nowadays it's kind of a continuous sales software approach that we need to keep proving value and feeling value if we are the customer out of the solution that we have bought. So it's not something that we have bought a very legacy-oriented solution, and nowadays, after 3 or 5 years, I'm considering if we should go away to another solution, and then in 5 years I will think about it again. But during the next 5 years, I will not take too much attention to that. So, what was the purpose and the why behind this new article?
Great question there, Mike. So, as an investor now, I spend a lot of time talking to companies, talking to startups that are scaling or looking to scale, and working with portfolio companies, helping them to scale. And so one of the things that has sort of become very apparent to me over the last few years is that the way that we build sort of contemporary SaaS companies, from a commercial perspective, from a sales marketing perspective, hasn't really changed that much over the last 25, 30 years. However, the way that we build software, the way we distribute it, the way we license it is completely different. So I started to then look at that idea and go, well, actually, that helps me to contextualize some of the many challenges I faced as a software executive and working on the CS front. Because what we've essentially done is taken everything in the old world when a customer or a prospect would buy on-premises software, they would be perpetually licensed. They would own the license forever. And they would make a capital expenditure, right? And we've taken everything that we did then and we've moved all of it into the contemporary SaaS startup world. And we're trying to get companies to scale when the customer is now buying cloud-based software, not on-premises. They're not making a capital expenditure, they're making an operating expenditure.
Exactly.
And they're not perpetually licensed. They rent the license from us every month or for the year. So that really got me thinking about what some of the challenges are for contemporary startups and scaling. It's like, well, actually, everybody is telling you to build a commercial organization, all the literature, all the advisors, all the other investors, they're telling you to build your commercial organization based on how we did that 25 years ago or 30 years ago. Now, 25, 30 years ago, it made absolute sense to focus on contract signature because the customer was perpetually licensed, they had the license forever. They would have to sink a lot of capital in terms of just getting the software up and running. You know, they had to buy data center space and servers and racks and backup solutions and, you know, all sorts of things that they had to spend in order to just simply use your software. So the switching cost for them was pretty high. You know, they would have to, it'd be pretty serious after spending that much money capital for someone to say, this doesn't work, we made a mistake, let's look at something else. Switching cost in SaaS is, you know, it's really low. It's really low. It's pretty low friction, especially now with the sort of API economy, right? You know, it's much easier for software to interact. It's much easier to extract data, etc. So what I noticed was that we still kind of organize sales the same way that we did before, and we still kind of pretty much incentivize and pay our sales organizations the same way. We say, we're really going to incentivize your contract signature. And part of the thrust behind writing the article was I wanted to sort of help founders to understand that this is just a legacy thing. This is just because this is always how we've done it. And really that legacy, or what I call in the article, the orthodox sales approach, is because it's only concerned with two things, inbound and outbound sales. Someone comes to us or we go to someone. And really in a SaaS model, we have to do inbound and we have to do outbound. We can't build a company, but we have actually a third type of sales that we need to think about. And that's what in the article I called continuous sales. And this is this idea that contract signature doesn't represent the end of the sale. It's actually the start of an entire cycle of selling, because we need to make sure, first and foremost, that the customer has seen very quick value from the software that they initially purchased, because otherwise we can't come back to them and ask them to do more business with us. So I'll pause there for a moment, but that was kind of a very, hopefully reasonably high overview of kind of the thinking behind the article and why I kind of positioned it as that there is this missing piece of sales.
Absolutely. That's a great topic. And I see this kind of mindset being a bottleneck on revenue growth, definitely, and especially on creating the different revenue machines for each stage of growth, right?
And I think that bottleneck, it's a key point, Mike, because unless you become a multi-product company very quickly, as you're scaling 1 million plus, or unless you create or unless you have an inexhaustible addressable market, eventually you will tap out who you can sell to, right? Either because competitors will move in, and that's often the case, and you'll find it harder and harder to differentiate, or you have to have more products or services to sell them. So the idea behind trying to encourage founders to have a continuous sales motion as well as an inbound and outbound one was what you're then doing is you're laying down a foundation of sustainable revenue growth. So what you're saying, it's much easier to scale from 1 million upwards if you have really low churn, and you're growing revenue from your existing customer base. In my experience, if you are scaling really fast on the sales marketing front and the product front, but you've got a lot of churn, it's almost impossible to fix because the business is moving too quickly. So now that scenario may work for 3, 4, 5 years, but eventually you're going to have to sell so much new licenses and revenue to make up for the loss. You won't be able to keep up, and then you're fundamentally the writing's on the wall at that point.
Absolutely. And even when you become a multi-product company, the easiest way to start distributing new products and services will be with your existing customers. So
exactly, yeah.
If there is not
that I always give to people who say, well, I'm kind of happy with the way we're doing sales and churn, we can manage churn, we'll throw a lot of resource at it. I always ask them the same question, is like, how much new revenue at Salesforce do you think comes from the existing customer base? It's a multi-product company, right? And everyone kind of sort of says, 30%, 40%, blah, blah, blah. And I think from the annual financial statement a couple of years ago, it was something like 78% or 73%, something crazy, right? And I was like, that is why it is a bellwether of the industry. They sell to the people they've already sold to, right? And I think that is the true way to build a very sustainable, fast-growing business.
We always cover here 3 critical ingredients to scale. As we have been moving through it with you already in past episodes, let's be flexible today and go into the points that you want to add more value to the audience and to our community. So those ingredients are radical focus, number 2, world-class leadership, and number 3, we have kind of rebranded or moved it from the culture of execution to an execution machine, because culture is also include perfect. We have that perfectly well summarized, I know, in advance. But let's start with the first one, right? So how this approach can help us to assure that we remain focused. I think that we have already kind of covered it. But what are the main points that you'd like to highlight in terms of a radical focus perspective?
Yeah, so I think if we want to scale a business, I think one of the things that you have to have radical focus on a number of things, but I think one of the key ones is on net revenue retention. So from a scaling perspective, this is often something that's reported on almost like a byproduct. It's in the board deck. But what I was suggesting in the article is, when I say building a continuous sales motion, what we're really saying is typically it takes 2 people to sell. It takes a commercial person, an AE, normally supported by a product technical person, an SE. What I'm suggesting is you simply mirror that with your existing customers, whereby your customer success person is kind of mirrored of the SE, and that you have also some commercial owner of the existing customer, whether that's the original seller or an account manager, but someone whose job is commercially to drive growth in the existing customer base, working with their CS counterpart. But in order to make all of that work, the business has to really be radically focused as one of its key metrics on that net revenue retention. How much revenue are we retaining from our customer base, and how much is the customer base growing? And this speaks to, the other areas you like to delve into about world-class leadership and execution, is if you don't have radical focus on NRR, if in theory no particular role or roles own that number, then it's going to be very, very hard to scale the business. It really, really is.
Absolutely. That's really a great point, and I see some resistance even sometimes on introducing that metric in the company OKRs, which I think it's critical, because then if it is in the company OKRs, you are able to have someone accountable for that number, because that's how it works. Correct, and to define targets and then
exactly, and it's there's always a tussle, I think, scaling a business between leading and lagging indicators, right? So, your leading ones are ACV. We've got to add new customers, add new revenue, right? And your lagging ones are kind of things like NRR, right? Because that's over probably a longer period, a quarter or a year. But as my grandfather was very fond of saying, you should fix the roof when it isn't raining, right? So if you have a radical focus on net revenue retention, as a business from day one, I not only want to build a great product, I not only want to learn how to sell this product repeatedly, but I want to be able to drive more business from my existing customers. And that is part of my focus from day one. You're really on a very, very good trajectory to building a very big, successful business that you can scale quickly.
Absolutely.
Yeah.
And also a point that I'd like to make here is really doubling down on the niches of your current customers that might be more strategic in the midterm.
Yeah.
I'm saying if you are really seeing a huge growth in the American market, for instance, or in a specific region of the American market, in a specific industry with a specific size of company, it would be good also to take that NRR of that specific segment and get obsessed about growing that NRR. That might help you with revenue
Correct.
acquisition on that niche.
It might help you orient your roadmap, for example, in a slightly different direction, which means you could sell more. Yeah, exactly. I think it's a sort of this idea of looking at NRR by cohort, right? By region or industry or something. Yeah, I think that will help you to figure out things like, do you have the right product market fit, for example, or do you have the right skill set? So yeah, I agree 100%. Because
maybe some of your existing customers might not be so strategic, so you don't want to invest too much. You want kind of to protect those accounts, but you don't want to keep increasing the level of relationship and the level of trust.
The cost of that acquisition. Yeah, exactly. Yeah. So again, and I think this is part of, if NRR is part of your thinking, then what you'll be able to do is make decisions like that much more cogently.
Absolutely.
We are unlikely to drive new revenue out of this customer until we have these additional features, or actually we've sold to everybody in that company. So our focus there is maintain, maybe try and drive some advocacy from that customer, reference case study that will help us drive top of funnel. Mm-hmm. But our job is to maintain. But and I'm sure you, from all the entrepreneurs you speak to, Mike, these days, even large corporations do not buy enterprise-wide. They will start small and grow in.
Exactly.
They'll start in one part of the business, one region, one department, and they'll see, and then they'll look to expand. Gone are the days where someone would buy for 155,000 employees in one go. There's a few examples where that does happen, but very few. So, again, I think that's why it is super important to have that NRR focus, because almost everybody grows into the initial contract.
Absolutely.
It's like compounding interest, basically. That's the way I look at it, right? It's almost the equivalent of compounding interest.
Absolutely. You have already approached that, but from a world-class leadership and culture perspective, one of the issues with this kind of metrics is that they are the result or the product of the intervention of different people in the team. And it's quite difficult sometimes to align the interests of those teams to really work together, not only from the kind of the sentimental or emotional perspective that they want to work together because they want to be successful as a team, but also from a compensation perspective and alignment perspective, it also makes sense financially. So how do you align a team to make it work?
Yeah, this is a really great question, Mike, because I would say 80% of my conversations in a given week boil down to some kind of question around what's the best way to align to get this done. And I think you described it beautifully there. Certain outcomes require an intervention of multiple people. If we go back to the orthodox sales approach I was talking about, the on-premises approach, that's designed like a production line. And I think we may have spoken about this in our last conversation. Startups tend to be, especially go-to-market teams, tend to be organized like a production line. We have SDR, BDR, AE, SE, and everybody's got a little slice of this production line. And so what that tends to do is we tend to start incentivizing people just for their little slice. And that then reinforces this production line, right? So I think from a world-class leadership team culture, what you ultimately really want to be doing, and I'll take the example of sales and CS leaders, for example, You want to be hiring people who philosophically believe that their job starts at the contract signature, not ends at the contract signature, right? And I think that can be easier said than done because of just, the orthodox way we sell has been around for a long time. But, I've been fortunate enough to, and one leader springs particularly to mind, to, work with some world-class sales leaders who are like, actually, it's not the goal of just selling once. I want to come back and keep selling to this customer. So I need to have this really strong alignment with sales, with CS, with SE, all these other people that will affect my ability to do that. To make sure we're creating the conditions for not just one set of revenue from this customer, but from multiple, right? So I think it really, from a team culture and world-class leadership, it really is that philosophically we believe that our job begins at contract signature, and we're going to work together to make that real. And I think that's not just a leadership trait. I think individual salespeople, individual success people need to think that way too. They need to think about our job here is not, our job is not just to sell once and try to keep them. Our job is to sell once, try to keep them, and try to do more with them. Right. So how do we work together to do that?
And that's curious because sometimes when the incentives are not aligned, so maybe the CSM might not have the AE excited to work on that specific account because they have another priorities of other accounts that might make them their bonus much better and their results much better than to focus on those kind of customers. So I think this is sometimes shows that the model is not working, right?
Yeah, and I think it speaks to the third thing you mentioned there, Mike, which is this either culture of execution and effectively alignment, right? So my experience is founders and leaders go kind of crazy trying to think about the org structure alignment. And I actually try to encourage them to think about the incentive alignment, which you can do separate of the org structure alignment, is, if you want to get different roles to work with each other because they need to bring their different skills in order to make something happen, like NRR or new ACV. Well, first of all, make sure they're working on a common book of business, right? So if sales is organized by geography, make sure CS is organized by geography, or professional services is. If sales is organized by industry vertical, make sure that all the functions that need to work with it to drive new revenue. And when I say sales, that could be AEs or account managers, because it may be people who own the customer after the first sale. So I think that's really important, because then you can create a culture of, well, hey, we're CEOs of our territory here, our book of business. This is our book to run and manage. And on your question of prioritization, you can then have AM and CSM argue about prioritization. I think this is important. I think this is important, and come to a conclusion as to where they're going to focus their time. Sometimes the AM will win, sometimes the CSM will win, right? But they're taking ownership over a common book because they're aligned on it. And I think then going back to this idea of abstracting away from the org structure and looking at the incentive structure, give them some targets that are in common, right? And they don't have to be the same percentages. The example I always give is, if you have a seller and they have, obviously a compensation plan, why don't you make 5% of their comp based around the customer being fully deployed in 90 days, right? Because then they have an incentive to get that full 100% compensation to set their CS or professional services person up for success. Well, let me get you introduced to the customer and let's get started on this, because I want to get my 5%, within the first 90 days. Similarly, why don't you make 5% of the CS or professional services person's comp based on helping the salesperson close the deal, right? Then you've got, so then what you're doing is you're aligning them on the key thing you want them to focus on. I want 95% of my compensation for a salesperson to be focused on new business, ACV. And I want 95% of my success person or professional services person's comp on fast time to value, getting them deployed in 30, 60, 90 days. Well, why can't I give them 5% that overlaps? Because then they've got an incentive to work with each other. And some people think that's super controversial. And I'm like, to me, it just makes complete logical sense. And by the way, if people complain about it, that's normally because it's the right thing to do, in my experience. I haven't yet to meet a happy salesperson or a happy CS person. They're always complaining about something. So.
Okay, I feel relieved after that comment. Okay.
Yeah, but you know what I mean. It's like my territory's too big. It's not small enough. Blah blah blah. I got too many accounts. There's always some tension there, which is fine. That's as long as it's healthy tension. Yeah. But what I'm really talking about, all joking aside, is making sure that they've got their own business that they're running together and that they've got some targets that incentivize them to have to work with each other. I think that's really, otherwise you go back to that production line, right? I did my piece. I was optimized for my piece. I handed it over to someone else. And beyond that, once I handed it over, I stopped caring about it.
Right.
Yeah. And
I like the idea.
That would be okay if the business never cared about NRR or selling more to that customer. Yeah. There is definitely a cultural phenomenon I see with founders and startups where they go, they kind of think renewals or uplift or growth of customers happens by magic. Mm-hmm.
Exactly.
They're often so far away from the huge amount of work that goes into not just keeping the customer, but growing the customer. And that's normally because as the business scales, their view becomes a spreadsheet or a dashboard. We talk about founder-led sales a lot, right? Founders should learn how to sell. There needs to be founder-led success. They need to know how to deploy, nurture, and grow because they need to understand just how much work's involved. I genuinely meet a lot of founders who think, oh, the product just sells itself, right? And it'll just continue to sell itself. And I'm like, unfortunately, that's not true.
That's why usually in the weeklies that I set up with leadership teams, I usually introduce one of the points of the agenda. It's about the customer stories. So everyone is encouraged to share anything that worked well, not so well, or something that we learned in the previous week working with customers.
Yeah.
And if we can be specific about sharing really the story, the name of the customer, who is the customer, what was the challenge that we faced, what have we learned, or even what is the problem that we are trying to solve because we didn't find yet a solution. I think this is quite important to assure that we keep being customer centric, right?
And it's not just customer centric; it's just continuously learning, right? It's continuously learning. No business is static. You're scaling, you're changing your product, your customers are changing. So you have to, I see like a lot of later stage businesses where the reason that they're having a problem is they decided on a certain way of working and then they never looked at it again. They never altered anything that they were doing, despite the fact that they'd suddenly moved into a different market segment or a different region or et cetera, right? So, that's the great thing about having customers is they will always teach you something new.
Absolutely. Yeah. And that's great. I think that we kind of covered almost the checklist that is present at the end of your Medium article, the missing piece of software sales. I would quickly just go through those questions because I think that it's really interesting, and I will let you add any final comment that you'd like to add to it. But some of your questions are: who has commercial ownership of a customer after the initial sale is concluded? Second, if you have mirrored the commercial and product owners, are they both suitably incentivized to make driving new revenue from existing customers worth their while? Third, if you have successfully mirrored both owner roles and incentivized them correctly, are they aligned on a common book of business? Number four, in deal reviews, are you mandating before a deal can be closed, one, that there is a plan in place to set customers up for long-term product success and future new revenue? And finally, who owns the net revenue retention number? I think that's a great summary of what we discussed today, and very good questions to ask.
Yeah, I think the first one there is the key one. Again, I just mentioned it sort of semi-jokingly. A lot of founders often think renewals and growth just happens automatically. And in those situations, they don't actually have anyone who's responsible for driving new revenue from the existing customer base. And I think that's the key question I talk to founders about a lot. Who has commercial ownership after you've sold the first time? And normally there's a lot of silence when I ask that question. And we talked about this idea of mirroring. You mentioned it there. Mirroring is really, you have typically two sets of skills to sell: commercial skill, AE, technical product skill, SE, how have you mirrored those with your after the initial sale? So do you have a commercial owner, AE or AM? And do you have a technical product owner, customer success person? And it's just about making sure you're continuing that same set of skills, maybe in different people, with the existing customer base, because the selling effort never really ends. The selling effort is a continuous one.
Absolutely. So always amazing. I would like also to highlight, just to wrap up, one of the quotes of your article that I really enjoyed is, in a continuous sales motion, customers need to be continuously sold on the value of their initial software purchase and to see its value realized in the shortest amount of time with the least amount of effort on their part. So it seems super easy, but there is a lot of work to make this happen. And this is really, really important.
It's really important. And I think going back to the start of our conversation, Mike, about squeezing everything in the old world into the new world. In the old world, it was not uncommon for a big software purchase to take a year, 2 years to be deployed. Mm-hmm. And because of the sunk cost, the customer had to keep going. They had to keep going. So we were less concerned about time to value, because we would sell a big contract, we would fly professional services or partner in, and they would work for 7, 8, 9 months or a year, and then the customer could use the software. We changed the distribution model now, right? It's SaaS. There's typically not much to deploy, if anything, maybe stuff to configure. So we've got to be able to do that quickly. And the customer has a busy day job. And this is the other challenge I sort of see with startups is, you live and breathe your product, but your customer does not. Your customer is an insurance company or a bank, or, they've got other stuff that they need to be doing. Right. So how can you make this as quick and as least effort for them as possible? And that is an area I think a lot of founders would do well to understand themselves firsthand. Just how much effort does it take to drive that fast time to value?
Ruff, again, amazing stuff. Is there anything that you'd like to highlight to close our show today?
Just to reiterate, if anyone wants to read the article, it's up on Medium. It's called "Missing Piece of Software Sales." I'm shortly going to publish my latest article, which is actually a framework for hiring customer people. One of the current challenges I see is that founders will often go through 2-3 rounds of hiring before they hit the right profile. And so I've taken all that learning from the last couple of years and built a framework for people to think about what skills they need and how to find those people. And of course, if anyone has any questions, I'm super easy to get a hold of. You can find me on Medium, LinkedIn, Twitter, and just remains for me to say thank you, Mike. It's been an absolute pleasure to come back and chat with you again.
My pleasure. It was amazing. And of course, you are more than invited to come to share with the community your new article. It sounds again straight on point, and it seems that you are picking all the issues that you are facing with your portfolio of
it's really more, Mike, here's all the mistakes I made in my executive career. I'm gonna write it down so other people could maybe avoid some of them. But
it's kind of
we'd love to come back. That's it's a very generous offer. I'd love to come back and speak to you again.
So this was Rav Dhaliwal, venture partner at Crane, back on the show. The previous episode is the number 173 if you want to get back and learn even more from Rav. And we keep bringing you the best of the best to make your life easier, scaling your company from 1 million to 100 million. See you soon and keep scaling.